So let's start the solution. First of all, we will define five type of accounts throughout the accounting subject. Followed by that, diamond rules of accounting that will be applicable on recording on of the financial transaction in the books of accounts of the company. Okay. So first is assets. What are assets? They are nothing but the amount recoverable from the customers after we have sold inventory to them. Okay. Cash, bank balance the entity has. Okay. Like let's say suppose we are into business of selling printers or computers to our customers. So obviously, if we make cash sales to them, so there will be a cash and bank balance we are maintaining at our entity level. Okay. So the cash and bank will be considered in assets. Okay. Likewise, inventory is like you have, let's say suppose you have, before you sell the printer to the customer, you purchase different parts of the printer from your suppliers. So that becomes your inventory. That it is a raw material which is which is processed by your company to make it a complete printer. Okay. Which is sold to the customers. Then come to liabilities. Okay, what are liabilities? Liabilities are in contrast to assets. Let's say suppose if we are into business of selling printers and we have purchased some different parts of printer from our supplier, but we have not paid them. So that part, that amount will become payable amount. Like we have to pay that amount in later point in time. Okay. Also, a payment. Suppose you take loan from the bank to purchase house and different types of properties or vehicles or any type of property that you want to purchase. So there are short and long term loans which will be classified under liabilities. After that we have assets. After that we have capital. Capital, let's say suppose we are willing to start the business but we are short of funds as of now, so we will go to our relative friends, different types of investors to raise the funds. Okay. So there are different medium through which we can raise the funds. However, there are very very dominant, or we can say very very popular method of raising the funds, which are equity shares, preference shares. I would request all of you to write down what I am writing down. Why? Because it will become very very easy to revise everything before the exam at the first hand, so that it will be very very clearer to you. Okay. Now, expense. Everyone will be familiar with expenses. So every expense for business purpose. Okay. For business purpose only. Let's say suppose if the businessman is considering the expense of marriage or part of any type of party arrangement in its business to reduce the profit down, that will not be the case. So that will be considered as a tax avoidance matter. So that will not be possible. The fifth type of account we have revenue. Like with the expenses, this is similar, but in contrast to expenses like sales, other income, like that. Okay, so we have five type of accounts. Okay, for these five type of accounts, we have diamond rules of accounting. Please note it down this also, because throughout the accounting, diamond rules of accounting are most popular, and these have been just invented, I guess, 5 to 6 years back. Before that, they were only golden rules of accounting. Okay. Followed by that, we will come to our main solution, because before deriving the solution, we also need to know that what is the basis of the solution we have derived. Okay. So increase in assets, expenses will always be debit. Okay. What is the meaning of this? We will understand it. Decrease in assets, expenses equals to credit. It is simply that, let's say suppose we have increase in our assets in terms of cash, in terms of inventory, like the items we have noted down in the first sheet. Okay, so we will make a corresponding debit of the amount in the books of accounts of the company. Okay, decrease in liabilities, capital, revenue equals to debit. Okay, so these are the account diamond rules of accounting that will be applicable on five type of accounts. Whenever there will be a financial transaction, we will use these account diamond rules to record the journal entry in the books of accounts of the company. Followed by that, what is the requirement of the question? The requirement of question: which type of which type which is the which pair out of the given four pairs of the accounts will be increased, or will be increased credit entries. Okay, so we can identify from here only increase in liabilities, capital, and revenue account will be given a corresponding credit. Okay, means it means that if there will be any increase in liabilities, let's say suppose we have $500 of liabilities as of now, like we have purchased $500 of material from our supplier, we have not paid the $500 yet. Now we have also purchased some other material from other supplier for $500. Now we have aggregate liabilities of $500. So there will be a corresponding credit of next $500 in the books of accounts of the company. Okay. Now, out of the following pairs, The correct choice is D. Why D? Let's understand. There are two terms in the pair. Okay, there are two terms in the pair, and I will tell you that how they will become the items out of these three items to get qualified become solution for our current problem. Okay, accounts payable. So what is the meaning of unearned service revenue? Okay, it is the service revenue received, which has been received in advance. Like it is the amount which has been received in advance by the service providing entity. However, the service entity has not performed the services for the entity from whom the payment has been received. Okay, received in advance but not performed. Please write it down to get clear interpretation. Okay, or to make it more revisable at later point in time. Now, what are accounts payable? So, received in advance, received an advance but has not performed services. Let's say, suppose we are we have received the amount for delivering food and beverages to someone, to some customer in a different area. We have received the amount through online basis, like in case of today's era of online food delivery. So now we have a liability against that amount to deliver the food to that customer. Okay, so that is the unearned service revenue. It will become earned service revenue after delivering the foods and services to that customer. Sorry, accounts payable. These are the amounts which have not been paid yet. Like we can classify it as like this: purchased from supplies, purchased from supplier, but not paid. Like we have purchased inventory from our supplier, but we have not paid yet. So this will become our liability because we have not delivered the food and beverages to our customers. This will again become our liability. Okay. So what is the correct choice for the given problem is D. Okay. That's all for the solution. And I would again like to request to all of you that please write it down, these five type of accounts and associated diamond rules of accounting, to get a better clarity as well as better revision at the time of exams. That's all for your current solution. Thank you.